Hey everybody, Real Estate Ninja here. I hope you're doing great. I've got a great story for you, and the reason why it's great is because I have been warning about commercial mortgage-backed securities for quite some time on the Economic Ninja channel. And these are something that I believe are going to be worse during this crash than the mortgage-backed security fiasco of 2008. And right now we have two new defaults going on right now as we speak in Los Angeles. It's Brookfield defaults on two Los Angeles office towers. That is the title of today's story, and it's out of Bloomberg. It says properties include the gas company tower and the 777 tower. I guess 777 isn't so lucky anymore. Brookfield DTLA Fund had warned it may face foreclosures. Check this out. Brookfield Corp, parent of the largest office landlord in downtown Los Angeles, is defaulting on loans tied to two buildings rather than refinancing the debt as demand for space weakens in the center of the largest or the second largest U.S. city. Now, first off, these crashes start in big metropolitan areas and then they filter out into the rest of the nation, okay? So I want people to understand that. I have reported on multiple CMBS failures over the last year. It is getting worse and the numbers are getting more staggering. This one's impressive. Another thing that I want to point out too is that when these, the decision to just go ahead and default on the loan rather than refinance, you have two situations here. Two scenarios are playing out. The landlord knows that if they refinance, they have to refinance at a higher rate, which means their borrowing cost goes up exponentially. On top of that, they don't have the butts to fill in the seats. They do not have the tenants to rent from them. So they are at a loss. And this is going to get much, much worse. This is a great sign for those of you that have been waiting on the sidelines, those of you that have been preparing. That's why I wrote the real estate crash course. If you want to take a look, it's still 80% off before it's done being, I think the end of the month is when the price is going up. So check this out. The two properties in default, part of a portfolio called Brookfield DTLA Fund Office Trust Investor, that's a long title, are the gas company tower, which $465 million in loans, that's how much they have in loans, and the 777 tower with about $290 million in debt. According to a filing, the fund manager had warned in November that it may face foreclosure on the properties. So right there, it knew. Think about this, November, December, January, now we're February. We have now hit official foreclosure. They already knew that they were going to stop paying their payments in November. They told you right there. Pretty impressive. This is almost $1 billion. This is a lot of money that's being defaulted on. The company had the option to extend the maturity of the loans tied to the gas company tower, but elected not to. According to its latest filing, it also elected not to get interest rate protection that was required for loans for the 77 tower property, which amounts to an event of default, the filing said. Here's a quote. "We believe DTLA's decision to default on these two assets increases the risks for the remaining loans in their portfolio." Barclays PLC research analysts Leah Overby and Anjui Jain wrote in a note Tuesday. Brookfield declined to comment. The values of the comparable office buildings have broadly dropped, according to the Barclays analyst. Office vacancies have increased across the country since the pandemic made working remotely more routine. The vacancy rate in the Los Angeles Central Business District vacancy rate was 22.7% in the fourth quarter of 2022, according to Jones Lang LaSalle Inc. report. 22% vacancy for office buildings is massive, and it is going to get much, much worse as this problem gets worse. Now, I talk about this in the course because I believe that one of the greatest opportunities to gain wealth is real estate. I know that for a point. In my experience, it's been that way at least. But so many people have never been able to touch commercial real estate. And ironically, there's going to be a lot of people that want nothing to do with it because this crash is going to start in CMBS or commercial mortgage-backed securities. And they're not going to want it. But this is your greatest opportunity ever to grab onto commercial real estate. And I also give ideas in the course of how you want to take that commercial real estate and develop it to make real money outside of the commercial realm. But if you think about it, this is going to get worse and worse because like they said in the article, these two properties that they're defaulting on are going to have an impact on the rest of their portfolio. they are, if they're in trouble with two, I can guarantee you they're in trouble with more. And it's not just this company that's having problems. See, because of remote working and because of the pandemic, the whole game has changed. And if you're not ahead of the ball, ready to invest at the right times, and this isn't the time yet, we're not there. There's plenty of time to get ready for this. That's what that course is about. It's about getting ready to pounce when nobody else sees the opportunities. But when you can forecast what's coming in the future, it makes it a lot easier to have the cojones to literally, put the cash down on the line and go for it. And that's what I'm doing. I'm not telling you what to do. I'm not a financial advisor. I'm a real estate agent, licensed real estate agent, but I say I'm the worst one in the world because I'm an investor first. And so I have to think of the ramifications of where my money's going over the long haul and even the short haul. Most people don't think that. They think, oh, if I buy real estate, it's just going to keep going up. Well, it keeps going up because of the destruction of the currency. But in between it going from point A to point B, there's a lot of pain and a lot of joy in between. Well, I just want to get to rip the bounces of joy up to the upside and then sell and then start the cycle over again. Guys, I hope you got something out of this. CMBS is going to be a big deal, and it is going to be the story for 2023. And I'm going to keep reporting on this. Guys, I thank you so much for watching. The Real Estate Ninja is out.